a margin account. So they margin their own stock. In the old days in commodities, they called it the Texas hedge. And that's when you were long the cash and long the futures, which meant you really weren't hedged. You're aggressively long. And that's what corporate America has done. The Texas hedge is coming back to haunt them. And all of that capital that they use for buybacks has now disappeared. So this is as big or bigger problem than what we have in S&Ps. And the fact that it's even filtering down to the qualities, we used to call bonds a flight to quality, right? Well, this has been an amazing move in the bond market. And I was just one step early on it. So I was looking to get short right in here. And then after this, oh, it was here. All right. But then we had a gap and I just let it go. And this was a Monday a few weeks ago. But look at this. So it's not only that the stock market has wiped away all of the gains since 2016 when Trump was elected, but look at what the bonds have taken away. This is really something else. So, all the gains, all the blow off, all the safety, it's gone away. One other thing that I think we have to be aware of that, when there are problems financially, usually historically, there could be the next step, there could be some kind of conflict. And I don't know if you've noticed it, but President Trump is calling it the China virus. Every time he's up there on TV, the China virus, China virus. And they don't like that. Okay, so they're actually accusing us of sending the CIA there to release it. They're demanding information from us. They've expelled journalists there. So I hope it doesn't turn into a hot conflict with China. And also, when you think about China, they had a policy of one child per couple, and most of the couples would end up aborting the daughter, a girl, because they preferred to have a son because it could be more helpful. They were mainly farming. Okay, so there are a lot of Chinese out there that can't find wives. Okay, so that's our next concern is that some type of biological problem turns into some type of conflict. But in the meantime, let's take a technical look. Yesterday, I showed this black line that we hadn't gotten to yesterday, and looked like a third drive to a bottom was a great scalp. I mean, I'm always surprised that when I draw simple lines like this, how markets will react off of them. So, from this low, it was good for 200 handles. But then again, you go home and you think you have a bottom, and then this happens. So, most likely, since we're going to have another real negative week, right? Market turns don't happen without reversal weeks. They don't happen normally on candles like this. They happen on candles like this. Everyone see that? Yeah. Okay. See the difference? So we need a candle like this to say that we're going to at least have some type of bear market rally. We're not getting it this week. Maybe early next week, we could expect some type of turn. Um, Same thing with the metals. Although I'm interested in, going for some silver if we, have some type of one more wash maybe down here. This may have been enough down here. Look at the glaring divergence that we have in the silver market. And I haven't seen this in a while, but the last 24 hours, silver is actually holding up better than gold. Yeah. So this gold silver ratio trade, um, It takes a while for a top to develop, but we're starting to get some signs. In fact, here on your 1 hour, you have one, you have two. This may be worth a shot next week, maybe above 130 if we get up there and the RSI stays under 70. So this is something I think that we should all be monitoring for some type of generational opportunity. Okay, Ben is saying, look, we're in a cycle window. Look for many markets to turn late this week, early next week. Okay, thank you, Ben. Ben has a great cyclic feel for the markets. Is there anything else I want to cover? So, yields, China, the dollar. I remember a lot of people having a 102.20 target for the dollar. But if you really want to be bullish, you could probably just look at this range from par to 94 and a half, and that could give you 106, 107. I still see no reason to fade the dollar. Looks like euro's headed for 107, and then maybe if we get down to 106. We're halfway through the month. Let's see this month here. Yeah, should be by the time it's over. Perhaps we're going to take out this low at 103. I mean, cable has already done it, right? Cable's done it. Maybe it's the euro's turn. And can you believe it? We're even getting some type of turning action in euro pound, potential reversal. Look at this RSI reading. I liked it down here. And then I thought I'd get cute and played for correction here. Then it broke out, and wow, what a move! So when you look at this on the monthly basis, kind of looks like we've had three now. I certainly wouldn't be playing this to long side anymore. And let's look at the week. So this is saying if we are going to correct here, that the pound has been leading the decline, and now it's time for uh, the euro to play a little bit of catch up. I'm seeing two drives in crude oil here. Where was it? Yeah. One, two, still very low numbers. So maybe we get a pop before we take out 20. I hope everyone's reducing leverage and reducing leverage dramatically. Less leverage, if you notice it with the daily ATRs, you need to have your stops. You need wider stops. And also, guys, take it. When you have it, you have 100 pips on something, take it. All right. Or at least half of it, because I've never seen the market giveth and taketh away quicker in my career. Like I said yesterday, I don't know about you guys. I've never traded a pandemic. So, Chris, I did go over the S&Ps, and looks like it's forming some type of ending diagonal. For me, it's like a three drive to a bottom. Even new lows at 22.20 or so are not going to confirm. So I think we're close, as Ben Maldonado would say, to a low, not the low, to where we finally get a two or a B, maybe even back to 3,000. Anyway, that's my take on what's going on here, guys. Trade safe. The best way to trade safe is to trade with experienced people that, although none of us have traded a pandemic, we've been there for 2008, and I know Blake was there for the dot-com bust. So we've had experience with bear markets, all of us. A lot of guys haven't. Okay, I mean, a lot of people just started trading the last 5 years or so, and they weren't even around for the Great Recession, which I don't know if it was great for you or not, but that's what they call it. Okay, so you're very welcome, Brock. Uh, consider joining. We're about to have a sale, okay? Because we want you guys to be as well prepared
Yeah, it
in
has
an
started
extreme
actually.
environment. What's that?
It has started actually, coach.
Oh, it has started. Okay.
Yes.
All
If you
right.
go to the homepage
Uh, here
or
we
to
go.
pricing, you're gonna see it.
Oh,
Yeah.
look at that. That's a nice discount. Okay. So, with the money you're going to save signing up today, just think about how much toilet paper you could buy. If the stores if the if the stores if the stores can stock them with that kind of saving, you guys could go buy all kinds of toilet paper and sanitizers and masks, and you could for the next few months, or now they're saying 18 months, you could join our Corona Trader group, and they say, the Chinese say, crisis, what's the definition? It's danger and opportunity. And the danger is you miss the opportunity. And every day in the chat room, you're going to see multiple opportunities and great collaboration. It's a mastermind. So, Steve, you want to come on, or is Blake available this morning?
I'm sure Blake is here.
I'm here. I'm
Okay.
here. I just,
Hey,
yeah, I want to go over a few things, and
go ahead, buddy.
yeah. So as Steve pointed out, and it's on Dale's screen, this is a very, very uh, crazy environment, and to have you guys, prepared is important. And so, take advantage of the volatility offer. It's not a joke or anything like that. It's just just trying to make sure that you guys are prepared in this environment, because it is so volatile out there. The market is moving so quickly. uh, you know um, so anyway, take advantage of it, because it's good to be in a group where there's other people trading. The euro, by the way, we just filled a gap from I have to go over this really quick. We
Oh,
just
that's
filled
the
a gap.
Macron election.
What?
That's when the one all the way back there, Blake, on the euro.
Yeah, 2017.
Yeah, when the that happened when Macron was elected.
Yeah,
I
we
remember
filled it.
that.
We're there, but as I told other people in the chat room, it's like, well, what do you want to do with that? Do you really want to be long the euro? There's
Yeah.
talk of some central banks like Switzerland and Australia, and that are talking about supporting their currency. I don't think the ECB in Europe is in that category. So you're seeing a lot of these reversals in the euro Aussie, for example, and the euro New Zealand, from the overnight sell-offs that we had. But there's still, you take like the Aussie dollar, we're well off the lows, but we're still trading heavy because there's so much dollar demand out there. So that's just something to think about. One of the other things, there's two other issues I really want to talk about. Is we have weekly unemployment claims coming today, and they are going to be massive, 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 massive. So the number that economists are looking for, unemployment claims rise to 220,000. Yeah, that's so far off. I can't even imagine what they're going to be this week. They're it's going to be pretty.
And I think it's going to be only the beginning, Blake. I think it's going to get a lot worse in the weeks ahead.
Yeah, I was actually watching or I was reading an economist that expects us to have 4 million jobs lost this month. 4 million.
Might be the case, yeah.
4 million. Can you imagine? I mean,
Did you see the assumption now for second quarter GDP? Uh,
-10%. I know,
Negative 14%,
from
JP
JP
Morgan
Morgan.
says.
Yeah.
Did you see
Yeah.
Bill Ackman crying on CNBC
No, I
yesterday?
didn't watch that interview, but this Aussie dollar just trading so heavy.
Yeah.
Crazy. I mean, it's like, these things can't even get out of their own way. Um, yeah, it's just, I mean, it's nuts, man. I mean, this market is moving so fast, guys. You have to be so careful. I mean, you look at the Aussie. I mean, we've gone from 57 to 57.10 to 57.60, back to 57.05, up to 57.50. This is a 1 minute chart,
Yeah.
crying out loud. You know, it's crazy. It's crazy. I mean, these moves are so massively wild. And you can see stocks are just continuing to trade really heavy here. You guys just have to be very, very careful, very, very careful in this environment. I mean, this is a 1 minute chart, for crying out loud. And look, I mean, the Aussie looks like it's going to roll back over. One of the other things I want to talk about really quick is just the fact that that the bond market, you got to watch the bond market. That the thought process is here. Okay, let's take the 10-year and the 30-year for that matter. If the bond markets start to really roll over, that means like your safe haven bids are gone. Like, people
Yeah.
don't even want to own paper. I know you were discussing that a little bit earlier, Coach, but that's the truth, right?
Yep.
Yeah, I mean, you gotta watch the bond market. And the scary thing about, like, if you take the 10-year, and I'm just gonna go over to a weekly chart here. So
Yeah.
you take the 10-year, we had a breakout to the upside, false breakout, and now we're breaking down. And that, so technically that scares me, because in this environment, if we start seeing the bond market really sell off, that what, I mean, you had it in your 30-year too,
Yeah.
you know, big
Everything.
reversals here. So where do you run for safety? I mean, other than the dollar,
Right.
right?
This is how people come up with a plus 120 handle US dollar yen because of what's happening here in bonds.
Yeah, I mean, yeah, exactly. Okay, and let's talk about the dollar yen. I mean, talk about a mayhem move. You had a breakout to the upside, breakout to the downside, and now we're back at 110. There is a good shot that the dollar yen now can trade up, to 120. I don't think that's really super far off, especially if
Not if
you.
the bonds keep failing, Blake.
Yeah, right. So, um that's why it's like it's a really, really scary environment. And then I look at the dollar yen. Now we're well above the 110. Well, I mean, excuse me, the 200-day moving average. So I'm going to have to assume, as long as we stay above this 200-day moving average, the path of least resistance now is up, because we had rolled over, and now we're, now, and we rolled over, stopped everybody out. Now we're, going the other direction. So
Twice. We stopped everybody out on the long side. We then stopped everybody out on the short side, right? So it's
yeah,
even more vicious.
right. So, yeah, I mean, I just have to say that, be really careful. I know the propensity for most traders is to fade, moves. You see like a move like this, and you're like, oh, I want to buy the Aussie dollar. It's gone too far. You know, I'm gonna tell you, and something I told, my wife last night, because I was like, I couldn't leave the computer because the moves were so massive. I was like, these markets are going to move a lot farther and faster than people realize. And that's the thing about a market that has been lulled in zero volatility for so long. Um, and you know, so yeah, I mean, I look at the euro, and I was short euros yesterday at 109.50 or whatever. And when that news came out overnight, I sold the euro right here, about the ECB throwing almost a trillion, 750 billion euros at the market, and the euro spiked up to here. I sold a little bit at 109.50, got stopped out at 78. Then I turned around and shorted again, made like 10 pips, and then I'm like, whew, thank God I'm not dealing with that. And then, obviously you look at it today and you're like, wow. Uh, it's like I got up this morning. I'm like, dang, I can't believe I shorted it exactly where I wanted to short it, and now look at it. But it's like, when you look at these moves, the idea that most of you have is this, oh, okay, look, we hit 127% extension in the euro, we filled the gap, so I want to go long. I think it's best just to say, okay, where is the trend? In this case, you look at the euro and it's obviously lower. Where's the trend? Where's the best location for me to get back in the direction of that trend? That would be probably a move back up to 108 instead of trying to play counter trend. Wait for a move back up to 108 to sell the euro. That's going to be probably the safer route for you as a trader at this stage in the game, especially with equity markets. I mean, you look at the S&P, continues to just kind of roll over here, and as we see that roll over, we'll see the dollar continue to be in demand. So anyway, yeah, it's crazy out there, and it's good to be, like I said, it's good to be in a chat room where you can chat with other traders about what's going on, what's happening, and that's why Forex Analytics. Make sure you take advantage of this offer. All right, that offer, we'll let it expire at the end of the month, but take advantage of it. While it's here, because and we didn't, this was unplanned. We put it together the last few days. Steve did a great job putting it together because it just, I mean, the volatility that we have calls for it. So, so let's go back and talk a little bit about the bond market. Dale, are you back?
I'm here. Stelios is here. So
Oh,
it's
okay. Hey, Steve. Well, anyway, let's discuss a little bit about the bond market. How do you feel about bonds right now?
I'm really scared about it because I think that the end game at some point is going to be the bond market blowing up and seeing a spectacular end to the 40-year-old bull market. But I didn't, and I still don't expect that it might happen now. But it's extremely scary seeing that literally within the last 3-4 days, I've stopped counting how many trillion central banks have been throwing in the market, mostly buying bonds, and the bond market seems to have gone no bid.
Yeah, that's
Yeah.
scary, right?
It
So,
I
is.
agree.
hey, Stelios. So,
Hey.
yeah, when you have, I mean, first of all, I sit here and watch gold, and I'm like, why isn't gold higher? But I understand it was like a huge leverage position in the market. But you know, for all intents and purposes, gold should probably still be going. It should go up at some point. But Stelios, I just heard you chime in.
Yeah.
Somebody who's traded a lot of bonds in their life. What do you feel? How do you feel about the bond market here?
I agree with Steve. I think the way they're pumping, and announcing stimulus. And by the way, I stand by my prediction. I think that within the next days they're going to announce even bigger stimulus packages. They have to, because they can see that what they're announcing so far, even though it's huge by historical standards, it just doesn't seem to be able to put confidence back in the markets. I am short bunds, remember, from around 10 days ago or whatever it was, and it's
Great
in
trade,
the
by
money.
the way.
I like that. I really do, because now there's talk from the German side, very tentative, about Eurobonds. Before they were like, we're not even going to discuss it. Now you see some statements that are slowly showing maybe a change in tack. And I think if Eurobonds become reality, then the Bund is going to go a lot lower. So
do you think if Germany comes in with a stimulus package, you think bonds are going to continue to sell off?
I think so, yeah.
In essence, he thinks that bonds are going to get destroyed if Germany decides to also put itself on the hook for the rest of the debt of Europe. It makes sense, right?
Yeah.
Germany is the last bastion in this.
In all honesty, Stelio, I mean, I'm still very reluctant in believing that Germans are going to go along with that. Needless to say, I believe that if they end up doing that, obviously the bonds are going to suffer. But I also think that they're going to regret it in the future, unimaginably.
As we're talking about it, just look at what yields are doing right now.
Yeah.
Oh, wow.
Bonds are selling off. Yields are screaming right now. That's scary, right?
And
Yeah.
like Steve said, we've had what 30 years of declining yields to zero. This can never continue. Obviously, it can continue. It's been going for years, so it's very difficult to time the bottom. But at these levels, where you have trillions and trillions of bonds yielding negative, there's a point where it just can't go on anymore. So
not only that, think about all the supply that's coming to the market. So,
yes.
Martin Weiss talked about this, I don't know, 3-4 years ago, talked about a sovereign debt crisis.
Hey, Dale.
Yeah.
Dale.
Yeah.
Hey, before you continue this conversation with Steven Stelios, I have to run because these numbers, I'm going to actually pay kind of close attention to them. But I'm gonna turn over to you guys so you guys continue this conversation. I just want to thank everybody for supporting us, and I hope that we're trying to support you and give you an opportunity to get in with Forex Analytics under these crazy times. So please take advantage of the offer if you can, and come join us in the chat rooms if you know where the chat room is. And we've had some people come in because it's it's a dangerous market out there, and having people to bounce ideas off and hear other traders is important, and the chat room is right here once you're logged in. So all right, guys, I'm going to pass it over to you. Thank you, everybody, for being here.
Thank you, Blake. Good luck
all
today.
Right, see you guys.
Yeah, so difficult times for sure. You saw overnight the moves in especially the commodity currencies.
Oh yeah,
unreal.
Especially some crosses, I mean,
yeah,
crosses like the Euro Aussie, Euro Kiwi.
Exactly.
I mean, some explosive moves, unimaginable moves.
We are used to seeing big moves and stop hunts in Asian trading. It's normal, but this thing is just relentless. And the thing is, I don't think the dollar is done yet. So
no, I don't think the dollar is done either. We had this discussion yesterday on Skype, the team, with Gregor, and we're more or less on the same page. Just to explain here to viewers, we believe that the dollar is going to squeeze higher, produce a higher high above the 103, whatever it was, 103.80 or whatever it was. And once everybody's long and everybody that was short is stopped out, I believe there's going to be a huge sell-off following that. So now that everybody was looking for the dollar to weaken due to all the monetary stimulus coming through the pipeline, the dollar is doing the opposite for different reasons. It's liquidations and people going back to the dollar. Two is a liquidity crisis, and I do believe that the dollar is going to be very well bid, but I do believe that that's not going to be for a long period of time, and then I think we're going to see the opposite. Let's focus a little bit on the data. 10 seconds left. Philly Fed manufacturing initial jobless claims.
Philly Fed numbers for March, so this is going to should be negative. I mean, theoretically.
Yeah.
Initial jobless claims 281. Okay.
281, quite a lot higher. To be honest, as I said yesterday about yesterday's data, I expect data to get worse, by the week. So I don't expect data to go immediately bust. But I do believe that every single week we're going to have data worsening and worsening by a lot. So obviously this is quite a bad number, but I believe it's just the tip of the iceberg that we're currently seeing. Actually, probably the tip of the iceberg that we're currently seeing here.
Yeah.
Still no Philly Fed data.
No,
out?
I don't see it. It's often that it doesn't come out exactly on time, but
yeah, I know. Not a surprise, to be honest.
I'm gonna go have a Philadelphia cheesesteak.
US suspending visa services worldwide due to coronavirus.
Visa?
Okay. Yeah.
Do they take MasterCard?
The United
Yeah.
States is suspending all routine visa services as of Wednesday in most countries worldwide due to the coronavirus outbreak. A spokeswoman for the State Department said an unprecedented move that will potentially impact hundreds of thousands of people. The department did not say which or how many countries are halting services, but US missions in more than half a dozen countries, including South Korea, South Africa, Germany, Spain, on their websites announced that they will either stopping or significantly reducing services. Okay, interesting.
Yeah. What else? We had
Do you
the
think it's possible that this move lower in bonds and yields higher could drive dollar yen really to well above the recent highs?
Yeah.
Yeah, I actually believe it will. It will. I mean, it has a very decent chance of doing so. But I don't know if you heard it yesterday, Blake. Probably you didn't, because I know how busy you are. In my opinion,
by the way, Philly Fed minus
Philly Fed
12.7.
minus 12.7
Yeah.
versus positive 10 expected. So yeah, that's a cratering number. I do believe though that USD yen is a very tough pair to trade nowadays. It used to be much better correlated with risk, much better correlated with yields. Now it's not that well correlated with either. I think big part of that plays the fact that it seems to be like more or less collared. Is it by the BOJ? Is it by a Japanese pension investment fund? Is it a combination? Who knows? So I think there are much better opportunities to trade out there if you want to find yourself a nice proxy for playing either risk or yields or whatever. USDMXN, for example, proved to be a much better proxy to play risk off than USD yen did. So Stelio, what else did we have overnight? Besides extreme volatility in Aussie, Kiwi. By the way, here are some of the moves we had overnight. I mean, incredible. Just look at this daily candle. It's not like only the daily candle. I mean, look at the size of this. This daily candle is now, from the highs to the lows, 5.6%. And we're talking about effects. This is not a stock, right? More than 1,000 pips from the highs to the lows, and it's just half a day.
Yep.
Euro Kiwi equivalent. By the way, to point it out here, potentially very big reversal signals. Euro Aussie, Euro Kiwi. Let me pull USD NOK, because USD NOK is also working on a big reversal. Not there yet, but look at the upper wick of this candlestick here. It's kind of huge. Euro NOK. Let me find Euro NOK. Here it is. Euro NOK. Already a gravestone doji. So yeah, huge moves. Even USD CAD.
We had Norges Bank who said that
go ahead,
they're looking into going into the FX market and intervening, buying the krona and selling.
I'm with them. I'm going to intervene for them. I'm going to help them in the intervention. I'm going to do my part in the intervention. I don't know about you, Stelio. Okay, so anything else, Stelio?
No, other than that, the S&P they kept rates at minus 0.75%. There's no way they're going any more negative. We had German
IFO. And even if they do, what will the market do? I mean, I mean, I think that we've already reached the limit of whatever you can achieve with negative rates. I mean, what is it to happen then? Okay, let's say they go minus 1%. So what's the difference?
Yeah, it's zero difference, really. And German IFO Business Climate Index tumbled like 10 points, but these things are going to keep going lower, going forward.
Oh yeah, we haven't seen anything yet.
Yeah. So no, apart from that, I still think there's going to be this has to be some kind of coordinated action to stem the dollar strength, because really emerging markets, all the debt denominated in dollars, they're they're hurting now.
Speaking
so,
of that, Stelio, it's day, but I hadn't had time on the webinar because we have so many things to talk about. But I can't hold it on anymore. I mean, I'm looking every day at these, the exotics. Like, look at USD ZAR, it has gone vertical. Look at USD Turkish lira. Look at USD ruble. I remind you, look at this. Look at this move. This is being hit from both sides, both from the side of crude oil having been destroyed in essence, and US dollar strengthening against the vast majority of the currencies. You remember what kind of a crisis we had when we were up there in the ruble. I mean, it was
yes,
I remember, yeah.
yes.
So we're back there again. I remind you that just a few years ago, in 2014, the exchange rate between the US dollar and the Russian ruble was at 34, and it's currently on its way to triple that. So you can understand. Of course, Russia is one of the few countries that doesn't have the problem of debt. For those that don't know, last time I had actually checked it, it was when we had the currency crisis in 2015, 2016. If I remember right, you're going to laugh with that. I think that Russian debt to GDP was something like 18%. I mean, something that you don't find in developed countries. So those that believe that Russia is a country that is in trouble having to do with their balance sheet, trust me, they're not. I mean, the US is very much...
They're not. My issue with what they've been saying recently, that we have years of reserves to cope with oil at $20. If I was them, I would never want to waste my currencies reserves just to keep oil price down.
Stelio, I don't think they believe they're going to need to do it. That's
Yeah,
why
yeah,
they say it.
Yeah, maybe.
And something, I'm with them. I mean, I agree. I don't believe that they will have to deal with crude oil prices at 20 or below 20 or just above 20 for much longer.
Yeah, I
believe,
agree. And actually,
I believe this is going to be an amazing opportunity in the long term.
Yeah, and our friend Grigoris is saying we replay the tape of 2008, 2009. The ones that traded there see that. Yes, I was there. I remember exactly. And I've been saying this on the chat room and on Twitter every day. This reminds me a lot of that. So, you're seeing moves, exactly the same moves, actually. So history repeats itself, and you're going to see dollar strength, more dollar strength, and then it's going to reverse. And that's how it was before. I think that's how it's going to happen now.
And keep in mind, when it reverses, we were talking about that yesterday on Skype, just, saying it to listeners. I personally believe that you can see dollar 30% lower within a year. And I'm not exaggerating.
Given the speed of the rally, I think you're going to see 30% lower within less than a year.
Yeah. If you remember, Stelio, yesterday I wrote 6 months to 1 year. That's my prediction. 30% lower in 6 months to 1 year.
Yeah.
Hey, guys, when you look at the coronavirus map, world map, there are no red dots in Russia. I think maybe one, maybe it's in Moscow, but I wonder why. Either they're not reporting it or how they've been able to avoid it.
Yeah, for the same reason, they have almost no incidents in Turkey. I mean, there were Turkish TV shows that were explaining to people that Turkey's DNA is resisting the virus.
Huh.
I mean, yeah, right, of course.
Oh, yeah. So it really, there are cases in Turkey. They're just not reporting it, or you believe?
Of course, they're not reporting it.
Okay.
Same deal with Russia.
Erdogan.
I mean,
all right.
There is no issue if, you claim there is no issue, right?
Like Trump tried at the beginning.
Trump tried at the beginning, but in my opinion, it was one of the stupidest mistakes he has ever done, because did he really believe that in a developed country like the US, people would go along with that? I mean, I really never understood the initial response of the Trump administration.
They're preparing for an 18-month epidemic now. So they're taking into consideration that after this wave ends or subsides, that, it's going to reemerge next flu season.
Might be the case. Why not? If as long as we don't have a vaccine, there is absolutely no reason to believe that it's going to magically go away. It's not going to magically go away. Like the flu hasn't magically gone away in centuries, right?
Yeah, good point.
I mean, every year, not only that, let's hope it doesn't end up being like the regular flu, because I remind you, I mean, since I've had a child, we've been doing the flu vaccine every year. And every year the flu vaccine is different because you have so many strains of the flu vaccine and so many changes in this strain. So the flu vaccine has to adapt every single year. And despite that, you're still likely to get the flu. It's just less likely to get it. And if you get it, you are a lot more likely to pass through the disease in a much softer way than you would if you hadn't been vaccinated. So yeah, this is not an issue that's going to go magically go away in a month from now.
Because this could mutate too and be completely different by the fall.
So let me be very clear. If you're expecting a V-shaped recovery, you can expect that, but only if you really believe that monetary and fiscal stimulus are going to be so strong that despite the problem still being there and hampering the economy, the stock market is going to stop caring about that. But in all honesty, do you believe that valuations have definitely corrected significantly? But do you believe that we are back in valuations that are considered to be historically cheap for the market to stop ignoring them? I definitely believe not. And I'm saying that despite currently, and for those that are in the chat room, they know it, I'm currently actually long half of a position, the indices. Keep in mind, I'm not long because I believe this to be the bottom, right? I'm looking for something like that to play out.
Everything's a trade now.
Yeah.
No investing anymore, just a trade.
Just a trade now. Yes, absolutely. Absolutely. Just a trade now. I mean, being long fundamentally and structurally here with the global economy being, in a freezer at the moment, I don't know. I don't know. You don't need guts to do that. You need stupidity to do that. Anyhow, that's what I'm looking for in indices. Look at the S&P, look at the DAX. I see a similar pattern here. Gregor would tell you that this is an ending diagonal, but if you want to look at it from a simple technical analysis perspective, this is a descending wedge. And theory tells us that the descending wedge will likely fully retrace the extent of the wedge. So, for example, in the case of DAX, that would imply a move back almost to 10,000, 9,970, whatever it is. And I would then be looking for further weakness. In the case of the S&P, that could potentially imply a move back towards 2,700. And then I would be looking lower once again. In the case of the NASDAQ, we might see a move back towards 7,800, 8,000, somewhere there. So keep in mind that, seeing a descending wedge, especially under circumstances like this, it's not like a, certain win type of formation, right? Because a wedge can always surprise and prove to be a bearish consolidation. Now, in the case of the Nasdaq, it looks more likely. In the case of the S&P, because usually the criteria is the steepness of the wedge. So the steeper the wedge is, the more likely is that it is a reversal and not a continuation formation. So, the wedge here in the S&P is, borderline. I mean, it's decently steep. I've seen much steeper wedges. I would feel, even better if it was steeper. I mean, if it was like a wedge, like, with an inclination like that, right? Because, when the inclination is that much, it's very hard to think that then you can penetrate through, the bottom and accelerate lower, because already, you have a very steep depreciation. But in any case, I am risking half a position here to play it counter trend. But this is not for the weak-hearted, right? So you have to do this having a very clearly defined risk reward, and being absolutely determined to lose that money, because when you're playing counter trend, things like that, you'd better have the mentality that you've already lost that trade. Otherwise, you're probably going to mess it up because psychologically you won't be able to handle it. Now, having to do with other things that I haven't mentioned the past few days, you remember that we kept saying that copper was holding up, quite well in comparison to what was happening globally. Yeah, guess what? Yeah, copper didn't manage to hold, as well, and it has penetrated through. Actually, let's go to the daily so you can have a better look at it. So copper, couldn't stand to the bidding of everything else, and ended up collapsing. And we have now gotten close to the 2016 lows overnight, at least, because as you see, copper, as well as other things, Aussie, Kiwi, has already posted quite an interesting reversal. I mean, copper was at 197, currently at 214, all that within half a day. Aussie and Kiwi, same deal. You can see it here, Aussie, Kiwi. So the question is, were those exhaustive moves that we've seen overnight? I think it's likely. I think it's likely that these moves we saw, USD NOK, Euro NOK, Euro Aussie, Euro Kiwi, Aussie USD, Kiwi, might have been exhaustive. I want to see how we're going to close the day. And, I hope that's the case, because that would also probably point to a possible short-term reversal for risk assets in general. So keep in mind that quite obviously chasing these moves here makes absolutely no sense, because you don't have risk reward. I mean, I'm not saying they can't keep moving lower. They can keep moving lower, but where are you going to put your risk? So it's like flying blindly if you want to short them. So I definitely advocate against doing that. Now, being long against the lows might work. Let's see how we close the day. And when and if we see a rebound higher, keep in mind that, as we've said about bear market rallies, can end up being quite vicious. I mean, you might see within a few days big moves unfold in the opposite direction. Now, you shouldn't misinterpret these moves and believe that we've seen the lows, because fundamentally speaking, we're so far away from the economy, from the global economy being out of trouble, that I can't even begin to describe it. I think that just by the numbers we're going to be seeing within the next few weeks to a couple of months, the market is going to be seriously spooked. So I can't easily see any type of scenario that so early on we find a tradable bottom. But seeing a short-term rebound, yeah, we might as well do that. And if you have a look at crude, which today we have Tracy with us, a Shy Girl, for those of you that follow her on Twitter, I'm sure she's going to speak about crude. But I would like to see a short-term rebound from here in crude, just because we've now reached the 161.8% extension of this little consolidation that we had after spiking lower towards 27. Having said that, I'm still of the opinion that it is likely we might see a rebound from here, but I'm still of the opinion that it is likely that we haven't seen the lows in crude, in which case I would perhaps even be looking for a move to teens, 17, 18, 16, where I would be very interested in starting accumulating a position, both in crude, nat gas, why not? Here it is, by the way. Retesting once again this important horizontal support area. You can see it dating back to the low that we had in 2016, also a 161.8% extension. So I think that buying some of the big oil companies, those that have been around for like more than 50 years, 100 years, some of them, is probably going to be a good proposition on buying some crude oil down there. I think it's going to be a nice longer term trade. Also, I believe a nice long term trade is going to be to start buying metals like platinum. Platinum used to trade at 2000 and it's currently at almost 1/4 of that. I believe that longer term value for platinum is going to be much, much higher than where it currently is, especially priced in dollars, right? Palladium is the only metal I still believe can move lower from here. I mean, as you know, I traded this. That was probably one of the best trades I've ever had in my career. I mean, I was expecting this bubble to burst along with risk, but I do believe that we might have lower to move here. I mean, why not 1,250 back there, even back to 1,150? I think those are doable targets. Now, in the short term, if you zoom in, you're going to see that probably we have something like a descending wedge in palladium as well. Also, another indication, here it is, also another indication that palladium is more or less nowadays a proxy of risk than anything else. So I do think that there is no risk reward being short palladium anymore here. And I do think that this might produce a nice rebound if risk assets rally as well. But I believe that after that, palladium might have more to suffer. The same, though, doesn't apply with silver, for example. I believe that silver is already ridiculously cheap by historical standards, either in isolation, meaning just priced against dollars, for example, or even priced against other metals. Dale already mentioned, look at this, gold-silver ratio at historical highs. I mean, we can't be 100% sure what happened in ancient times. I mean, we're not 100% sure what was happening, in 2000 BC. But there is a chance that these are all-time highs in, how expensive, for example, gold is versus silver. And keep in mind that comes from a person that doesn't think that gold is expensive. I just think that silver is ridiculously cheap. So I do think that silver can end up moving lower from here. It can even test single digits. I mean, I wouldn't be that much surprised if we get something like this from silver and then down to $9. But keep in mind that, as long-term targets, I think that buying silver anywhere, from 11, I mean, scaling into silver from, anywhere between here and $9 is going to prove to be an amazing long-term trade. So personally, I'm all for it. And keep in mind, it's not by accident. And, I've tweeted about that several times and like exchanged tweets with David, for example, David Brady and some other people about it. It's not by accident that the paper market seems to be completely dislocated from reality, meaning you see that physical silver is now a lot more expensive than the paper market implies. And usually
by $4 at a lot of dealers.
Usually huge divergences like that are very indicative of what's going to happen. Because just imagine, we know that the paper market is valued multiple times than what global production is having to do with gold, silver, etc. Imagine what's going to happen if some of these big orders, instead of settling for cash, are requested to be delivered. I mean, the market is going to squeeze higher in a way you've probably never seen in the history of these metals. So being short these metals, in my opinion, is extremely, extremely dangerous, because there is a chance, and it's not an insignificant chance. You want to say the 5% chance, it's still not insignificant. There is a chance that one day you might wake up and find silver being 30% high on the day, overnight. See gold being $200 higher. So trust me, you don't want to be, as we were saying, that you don't want to be long S&P or short the VIX just a few days before they blew up, because it's like collecting, pennies in front of an upcoming train. Same deal here. You don't want to be short silver hoping that you're going to see $9, which you might. You actually might. And one day wake up and find yourself 30% out of the money just because, something happened and the market exploded. So, you want to be still short these metals, good luck. But if at least if you want to do that, buy yourself some puts. So at least, you have a predefined risk and you know exactly what you're risking. So, you have limited exposure and not unlimited exposure. Let me go through some of your questions. And sorry, guys, I know that these days you've been asking for a lot of stuff, but it's, with the market being as volatile as this, it's extremely tough for me to go through everything. That's why we also have the chat room, and that's why it's a good opportunity for you to take advantage of the chat room, because we are, at least some of us are there all day long. Some of us just, spend some time here and there in the chat room. Some of us are all day long in the chat room. Blake is almost all day long in the chat room. Amanda is like at least 8 hours in the chat room. Paul is at least like 8 to 10 hours in the chat room. Stelios the same. It depends on how much work I have. Sometimes I'm more hours, sometimes I'm less hours. Yesterday wasn't that much. The day before yesterday was much more. So you can ask these questions there, and we're there to answer them. And this is not like a marketing trick, like come in the in Forex Analytics in the chat room so we can answer questions. Literally, I don't have the time. I have like 10 pages of questions here today. There's not enough time. Now we have a question about cable. I'm going to cover that first, because obviously the cable has been one of the big movers. So, I can't ignore that. Listen, this has been an amazing dump in the market having to do with cable. Within 5 trading days, we saw cable trading from 132 to 114. So this has been, a huge, huge move lower. There is clearly no risk reward anymore in being short here. Having said that, if you remember, I started by saying that we believe that the dollar likely has more room to run to the upside before it can reverse lower. So I think it's quite dangerous being long the cable, not in the short term, because in the short term I can see why we can see some type of a rebound like this, perhaps to retest 120, but then we might have more weakness coming. I wouldn't be surprised to see this 161.8% extension at 110. 161.8% extension of this last rebound comes at 1099.60. So yeah, we might as well say it 110. So I wouldn't be surprised if after a little rebound from here, we see continuation lower towards that area. So it is what it is. I know that we're trading at lower levels than what we had post-Brexit. And there is no reason why we couldn't see even lower levels. So in my opinion, any retest of 119.50 to 120, 120.50 is probably a selling opportunity. Okay. Same deal with the euro. Euro currently testing here previous lows. It even almost made it to this broken channels trend line support. We might see a short-term rebound from there, and I wouldn't be surprised to see a lower low following that. Next downside target would be the 127% extension of this rebound, which would imply a move towards 106. Okay. Another target, downside target, would be the 161.8% fib extension of that at 1033. So yeah, more dollar strength likely to come. Let me reiterate, I believe that this dollar strength is a temporary event, and I believe it's going to be reversed in a spectacular manner later on. So I'm still of the opinion that the big money are to be made within the next few months, being short the dollar and not long the dollar, but not in the short term. So don't try to go against this dollar squeeze temporarily. Okay, you either go along with it and just be careful not to have like a big time horizon in your trades, or you stay on the side. Okay. Now I don't want to bleed into interview time, so as I said, this is your opportunity. Join us, and we're in the chat room. Go ahead and ask whatever you want for, and I can answer the rest of the questions there. Me, Blake, Stelios, Polly, Amanda. Keep in mind we're a team of 9 traders in there, so it's not a one-man show. It's not a two-man show. It's not just those of us that you listen to daily on Face. We have a whole team doing that. Thank you very much, Coach, and welcome, Tracy.
Yes. Okay. Thank you, Steve.
Thank you.
Hi, Tracy. I'm getting you set up now. There you are.
Hello.
Welcome back, Tracy. How are you?
Good. How are you?
Wow.
Right?
Yeah.
Well, yeah, I'm very tired. So.
Yeah, it's exhausting. Are you going to be sharing your screen at all, or should I share
No,
mine?
I can't do that with.
Okay, I'll do it. Okay.
So we'll have to do like we did last time because I don't have a microphone for my computer. So.
Okay, it'll be a duet. So why don't we start with initially this? You were around for the Great Recession, right? In 2008-9, you were trading. Okay.
Yep.
So I think the vol is even more extreme than it was then. Maybe it's because I'm old and my memory isn't as good, but the ranges, the illiquidity at times between the bid and offer in a lot of markets. And I don't think in 2008, the bond market became this dysfunctional where, the bid offer wasn't a 30-second, it was a full point between bid and offer last week. Have you ever seen anything like this, Trace?
No, it's very strange. I mean, I had it, everybody's like, this isn't the financial crisis, this is just a virus. And I'm like, yeah, but it's almost worse because markets are freaking out everywhere. And so there's a lot of strange things going on in the market. Absolutely.
All right.
And
so
they're razor thin. I mean, you look at, ES, look at crude. I mean, the markets are so thin, it's ridiculous.
Yeah, it's like we're going through, everyone was talking about market structure should, the sanguine times of financial markets go away, and now we're seeing it in real time. So I've crude up here, Tracy, and I'll pull up the weekly chart, and yes, we're challenging. I'll even go even more macro and look at the monthlies because I know, we're taking out the 2016 low right here. Tell us what you think. Were you surprised that Russia and the Saudis would have this oil war? And who's going to blink? Who's going to blink, Trace?
I mean, absolutely. That came. I mean, I was already positioned short. I as soon as this virus came, I knew. But yeah, that definitely came as a complete surprise. That came out of left field. So really, I think looking at the situation right now, it looks like Russia's going to blink first. They just came out there. We're kind of getting a few hints from them. At first they came out and said we could, survive $25 to $30 oil for, 5 to 6 years. And then, yesterday we hit 20 and they kind of came out and said that was kind of a painful level for them. Lukoil just cut CapEx today. So sort of getting hints from them that, this is kind of an uncomfortable range for them.
Any kind of level that is going to make sense fundamentally, because you could, there's nothing in the chart saying that there's a floor anywhere. Do you have any ideas of what may be a range for some type of floor at the end of this decline? Are we going to go to the teens at least?
Yeah, I mean, I definitely could see us hitting like the November 2001 lows, which was right around, $17. We're kind of in that range. That would be kind of your next support level.
Okay, here
I
we are.
think that could happen if you look out to, it was November 2001
Okay,
when we were last out
so
there.
here we are.
Yeah, so kind
It
of
was
you
still
see that
20, but maybe this is WTI. Oh, November 2001.
2001, yeah.
Okay,
So
because here, okay. Oh yeah,
we were,
1712 was the low, Trace.
yeah, right there. That's where
Okay,
I'm at.
all
So
right,
there's
and then
kind of your
that was a major bottom
that
after
was a
that.
major bottom because remember that was after 9/11. So oil kind of
Right.
went sideways, and then what happened after that. So
Yeah.
oil went, we went to the highs of all highs 10 years later.
Okay, so I mean, it doesn't feel like it's late to be launching shorts as well. I mean, sometimes
Oh
aren't
yeah, I mean,
markets.
I wouldn't. I wouldn't recommend anybody get short right here because I think a few things could happen here. Either Russia blinks. You have to
Right.
realize this cut agreement is valid until March 31st, right?
Okay.
And then September 1st, and they're all adhering to it until then. So there is still time for kind of Saudis to pull back on that decision and for Russia to pull back on that decision.
Okay.
So, at any time, if that news hit the wires, we would bounce, 7, 8, $8 on that.
Okay.
So I wouldn't, I'd be very careful with the shorts here.
Okay.
Just personally.
I mean,
because-
sometimes the right trade is no trade. That's where we're
Yeah.
at now.
Yeah,
in your
I mean,
view?
in my view, yeah, unless you're already swing short and you're kind of, your last level, you're looking for like that 17 area, but I wouldn't be really looking to initiate a trade here just yet.
Okay. I get your Twitters a lot. You know how Twitter sends out highlights of people that are in your feed. And I know, even though a lot of people look at you as, an oil trader, that you follow so many things. I've seen you
Yeah.
retweet work. What else is on your radar that you're really concentrating on? Of course, Corona. I have a question.
Yeah.
Why, when we look at the global map of Corona, do you have any idea why there are no red blotches on Russia?
Right, I brought that up the other day. I was like, it must be. I'm like, either they're lying about their numbers or vodka's the cure-all.
Yeah,
So I think it seems very strange. I actually talked to somebody that's in Russia, that's in Moscow, and kind of what they said that they think that there's just no testing available and that there's misdiagnosing people and things like that.
That's the case, Tracy. I have I have a friend of mine that actually works for Forex Analytics. He lives in
Finland.
in Finland, very very close to the Russian border.
Right.
So first of all, they've closed their borders, and second of all, I can attest to everything you just assumed.
So that's why. Okay.
So I just think, I mean, right now, I think today they just announced that they had their first death, and we're starting to see the numbers pick up there. But I think they were just not prepared as far as testing was concerned, and a lot of people were just misdiagnosed with the flu.
All right. Well, I also know that you pay very close attention to yields. I mean, I remember when we had a severe gold break, and it's when yields were going up, and you said it's all about yields. So if it's all about yields, and Trace, I know you've been around for a while. I've never seen a treasury break like this during a risk-off environment. And what do you think is behind this?
That was nuts. I don't. I mean, I don't know.
I don't know is a good answer.
I don't know.
It's hard to say I don't know in this business, isn't it?
A lot of, I think a lot of people were in that trade. Like it was a very big trade.
Yeah.
It was a huge popular trade. So, it could be either, people are, taking profits or, I mean, it kind of got scary up there. It was, like a freight train. It was a parabolic move. So, I can see people, sort of cutting back. Plus, you need to cover something to cover your losses in, say, the equity markets, right? So that would be, after a parabolic move, that would kind of be a good place to
look at that monthly candle.
Yeah, right.
Yeah. So, could it also be, and yields are starting to steepen again.
That's,
Could it
by the
be?
way, a key reversal on a
Yeah.
monthly for a
Yeah.
market that's been in an uptrend for
30
decades.
years.
That says a
Right.
lot.
30 years. So the end of the bond bull market is possible in March. Could it be, I used to read things about liquidity crises, going all the way back to the 70s, because we had one in the early 80s, but it was by design with Volcker tightening and bringing rates up to, 19%. If rates go up now, it's not by design. But could it be just that there's going to be so much supply because of all the programs? I mean, they're going to send me
Right. I mean,
$1,000.
right.
So go ahead.
I mean, they're just throwing so much at this, and it's not just the Fed. I mean, every central bank is
Yeah.
following suit. So, they're just trying to smash this market with as much liquidity as possible so that we don't have a credit crisis, right?
Yeah, and in fact, that's what actually is being sparked by the coronavirus. It's serious. I've been saying it's serious to be exposed to it, but it's also serious what it is exposing.
Right.
And I'm wondering if you, besides what's happening here, do you have a view on? A lot of people are disappointed. I shown the silver chart a monthly, I don't know, about 2 weeks ago, 3 weeks ago, and I would say, what's bullish about this chart? And that was, right in here. No havens except the dollar. Just
That's
that's it.
it. I mean, every metal. I mean, look at palladium, look at platinum. Gold's hanging in there because you know it's gold. But pretty much everything else is being sold off. Really, I mean, we've lost a third of market value across the index.
Yeah, there's
Right.
another
So
monthly key reversal, Steve Volke, and your favorite thing that you think is going to save you, called gold. So anyway, it's amazing to me. This is, what a lot of people wrote about, that when you have a liquidity crisis, people will sell anything to raise cash, right? So
right.
that's what's going on. What do you see as?
The danger in this case, though, Dale, is that, as you said, they're throwing even the kitchen at it.
Yeah.
Imagine what's going to happen when supply goes back to normal, which it is going to happen sooner or later, right?
Supply of
And
what?
all supply of goods and all this
Oh.
liquidity is still in the system. We're talking about trillions and trillions. If you remember, I had assumed that during the next financial crisis, the Fed's balance sheet is going to double. It's going to go, let's say, to 8 trillion. I think I was mistaken.
You were conservative. Yeah.
I was very conservative from what it seems.
Okay. Well,
I mean, they're going to
yeah.
have to withdraw some of that liquidity later. You can't have markets go back to normal and still have all that. I mean, it would be ridiculous. So
that is very true, but there is no perfect way to do it, unfortunately. I mean, you know how it is.
I totally agree. Yeah, no, I totally agree there.
So let me ask you this, Trace. A lot of people are going to hope for some type of V recovery when the virus ends. Normally, when there's this type of damage in the market, doesn't it take a period of time for the markets to heal before there is a recovery? Just like in health, you have to heal, right?
I mean, I definitely think it'll be more like a hockey stick recovery.
Okay.
Like a check mark, like, kind of a.
I bet you have a good slap shot.
I played field hockey. I'm not too
bad. All right. So, what do? You are you on the sidelines now, Trace? Make people feel comfortable that there's no law against not trading.
No, I'm the only thing that I'm trading right now the only thing that I'm in right now, to be honest, is currency. That's it. I'm short CAD and short euro.
Okay, interesting. So CAD finally getting a little pullback here. Tell us why.
I mean, I've been short these for a while.
Okay, so you've been taking heat because this is we're approaching new all-time highs on the monthly here. Now this is not a bearish candle. And all I have to say to Steve is if you believe in key reversals and bonds and you just cover up the title, you would not be bullish. And that's what our biases do to us sometimes. And I'm not saying you're going to be wrong, but I'm just saying that sometimes it's easy to accept a monthly candle like this because you could make a bear case for it and that's your bias, but tougher to make a bear case for this because your fundamental bias is the other way. Anyway, so you're short Canada. That has to mean
I'm very
that you're
short
looking
Canada.
for a turn in the oil market. Is that part of the reasoning?
So no, I'm short CAD. So I'm short. I'm literally just short 60.
Oh, the futures. Okay.
I'm in the future. So I'm short.
Yeah, I
CAD,
got
USD,
it.
not that.
Yeah, and you're up there. So tell us what life is like in Toronto with the borders being closed, and are you guys?
I'm in Montreal, but
Oh,
you know,
okay.
I live away from the city now, so I
Okay.
live, you know, in a ski town. But they did close down the mountain and everything, so you know, it's kind of quiet. I mean, grocery stores are open. That's about it.
Toilet paper up there?
We have toilet paper, yes.
Okay. Yeah, I got long some toilet paper futures.
Nobody went crazy toilet paper up here. I
Okay,
don't know
yeah, it's probably
why.
because Americans are anal. Okay, so anyway, that's why we went crazy.
We didn't have like none of our shelves were empty. The only thing that sold out was like Purell alcohol,
Yeah.
rubbing alcohol, Purell. I mean, that's about it.
Okay, so you're also you have a great trade on in euro. It was holding up better than cable. Cable's already, as I was showing people in phase, cable's already taken out historical lows. What kind of downside objectives do you have in euro USD?
For my long-term targets
Yeah.
is 0.9.
59 cents?
So 0.9. So like 90 cents.
Oh, 90 cents. Okay.
Yeah.
90 cents. So the parity guys will finally have their day. Okay.
So yes, that's my long-term target. But you know, I mean, my targets in these are, you know, my target we just hit my CAD target of 68 and the futures that I had from, you know, January of last year. So
wow,
you know,
congratulations. Yeah.
and I just said something that I think I might need to lower that.
Right. Oh, okay.
But yeah, so my currency trades are very, very long term trades.
Okay. Any view on equities? I mean,
You know,
have you
I
ever
don't know.
seen a decline like this where you wipe out 4 years of gains in 3
Yeah,
weeks?
no, it's crazy. I don't know. I feel like the market's going to give one of those rips, and then we're still not quite done yet. Because I think people get complacent here a little bit. We might see a market rip. You know how it is in like bear markets. You always get those
vicious,
screaming, vicious rips, and then we'll start seeing like Q2 data come in, you know, and I think then we could have, you know, another problem. Like I think markets are going to be volatile, you know, pretty much all year long. I don't really see, you know, because the after effects are going to be felt far after this virus is, you know, say in 2 months, you know, where kind of things are back to normal, etc. It's still going to leave a mark on GDP and things like that. So, you know, it's not going to be, you know, again, another reason why we're not going to see a V reversal. We'll see more of a hockey stick, yes.
Okay, is that your feeling that that's optimistic now, thinking that you know, we're going to have a rough 2 months here on the globe, and then things will dissipate? Because the U.S. is saying 18 months now to plan for this.
Yeah, well, yeah. I mean, they say 12 to 18 months for a vaccine or whatnot. I mean, yeah, so I think that, I mean, hopefully, I mean, if you look at the models, well, if you trust any number out of China, which is kind of hard to do, so you have to look at peripheral indicators as far as is their economy really getting back up to running, and you know, there's all these conspiracies going on, but you know, we have to work with the data that we have. It's just what we have to work with. So if you kind of look at their data and,
Yeah.
you know, the timeline's kind of been, you know, like 2.5 months that they're
Yeah.
kind of getting back to normal. So hopefully that model carries over. Now, you know, who knows, you know, who knows, will it affect the US population like it affected the Chinese population? I mean, there's so many variables in it. It's really hard to quantify things right now exactly.
Okay, so is this fairly new for you, Trace? Do you have a page up like this? Did you have it last time? Like a little
Yeah,
blog page?
yeah, I had that. I don't
Okay.
update it often, so but
Okay.
there's some good stuff in there.
Yeah,
Whenever
September. Yeah, okay. You haven't done anything
not
since
even
September. You've just
recently.
been counting all your pips being short Canada and Euro. You've been too busy, you know, just
Yeah, I
okay.
know. I haven't kept it up, but there's some good stuff in there.
All right. Any final thoughts that you want to
I don't
give
know.
our audience?
Stay safe out there,
Okay.
and you know, and it's always okay not to be in a position. You know,
Okay.
some of
Yeah.
these markets are very, you know, moving 100, 150 points at a time for ES is, you know, not
So
always easy to stomach for, you know.
yeah. So it's okay to be a spectator at times instead of a speculator.
Absolutely. Wait for the trade. Wait for your level. Wait for your trade. Like, this is the perfect time to practice patience and literally wait for your setup and don't try
Well,
to second
yeah.
guess yourself.
All right. Well, we impatiently wait for your next interview,
Okay.
Tracy. So, you know, I'll get in touch with you and we'll set something up. And I really want to thank you, everyone. You know, Tracy's very popular and she's a great follow. So at Shy GRL, I used to think it was girl, but it's grill. So Tracy, thank you so much for
Thanks.
coming in and you know talking to us, and you're like a calm voice in the middle of a storm.
Well, thank you. And it's always a pleasure to be on with you guys.
Thank you, my trading warrior sisters. So that's going to be a wrap, everybody. I hope everyone has a decent day, and like Tracy said, and you're hearing it from a professional, that it's okay. And like Tom Petty says, the waiting is the hardest part. So be patient, except about joining during our promo here at Forex Analytics. No patience for that, but you could. If you're not patient, how's this, Trace? If you're not patient, you can become one.
Yes, I like it.
All right. We don't
All
want
right,
that to
I like
happen. All right, everyone. Good hunting. Thank you, Tracy. Don't just count your pips, count your blessings. See everyone to wrap up the week. Adios.